this will be on Janobie. I will put this on Janobie, and we're going to start off with the whiteboard. So is this whiteboard helping y'all when I show y'all this? Put a 1 in the chat if this whiteboard is helping y'all. Awesome. Okay, so let's go with all right. So we got a candle body. Showing y'all a candle body. And this is the first candle of the day. What is, don't know if it's red or green, don't care, right? But someone give me a directional bias.
Bullish.
Bullish, boom. So it's going to be a green candle, right? It's going to be a green candle. The next candle gives us this right there. What do I have to do right now? Actually, Karen, you're on here. Talk to him. What should I be doing right now?
You have to find an unmute. Look, putting your line at the top of that candle, top of the wick, and at the bottom of the wick.
And what is that going to give me already?
That should give you where you're looking for your entry for calls.
Okay, so I'm looking for,
down.
right? But what's the top wick going to be?
The top of the fair value gap for your entry.
Okay, so it's going to be my entry, and then the bottom is going to be my what?
Stop loss.
My stop loss. So just from these two candles alone, don't matter the time frame, I already know where my entry is going to be, and I already know where my stop loss is going to be. So if this was 100 and this was 50, right? Let's just say that I can put in a limit order already for my entry and my stop loss, right? Now, when this happens like this, if I'm bullish, I'm expecting price to come back down to here. I don't care if it goes below it. I want it to come back down to here and then put me into that trade. So if the next candle is red and it does this, right, because it did travel below it, this is going to put me in my entry. Now, if this was a green candle, what color is this candle? If it came all the way back down here.
Red.
Exactly. If it came from this space that was right here to here, it's a red candle, right? It has to be a red candle in order to do that, right? So it puts me into this trade. And now I'm expecting price to do what?
Go back up.
Go back up. And when it goes back up, just like this, what does that give me now? Anyone?
A new stop loss?
Yes, it does give me a new stop loss, right? Because the same way that we found our entry and our stop loss here, for anyone who did not get this entry, their new entry is going to be here, right? Their new entry is going to be here, and our new stop loss is going to be here. The only thing that you're missing from this chart so far is where we pay ourselves, right? Now, you're either going to pay yourselves, 3 scenarios of where you're going to pay yourselves. At the close of a candle, when price takes out liquidity, meaning it goes higher than a previous swing high, right? Or if it hits an objective, right? Those are the 3 ways you're going to pay yourself. Don't know which one is going to happen all the time. Sometimes it's the close of the candle. Sometimes it's liquidity. Sometimes it is an objective, but you have to, everything it's dependent, right? It's dependent. So it's depending on what information the charts give you on how you pay yourself. But I like to pay myself at objectives. I like to pay myself at liquidity. If I'm in a channel where is the best place to pay yourself if you're in the channel?
For a call at the top of the channel.
Okay, what does the top of the channel look like? Because I gave you 3 scenarios. I gave you close of a candle, I gave you liquidity, I gave you an objective. If you're in the channel, which of the 3 is the best way to pay yourself?
I guess the top of the channel would be liquidity.
Liquidity, right? Swing high. So if you have something like this, right? This is one candle. This is another candle, right? And then here is an old candle right here. I'm just giving you 3 wicks. So as price goes up right here, we have to respect this if you're in the channel. And, this would be where we pay ourselves. Now, in this scenario right here, look how close we are to liquidity, right? You see how close we are, right? If this is where price is currently, and you're this close to the liquidity, which one is a greater risk? Or which option is the better option, right now in this instance? Do I stay in this trade and try to grab this, few ticks, few dollars right here? Or do I risk it coming all the way back down here, balance out this candle? So do we pay ourselves at liquidity, or should we pay ourselves at the close of the candle in this instance? Which one would y'all choose? Liquidity or close of this candle?
Close.
Yeah, the close, because the risk to reward is no longer in your favor, right? Your reward is only this option right here between the difference between the close of the candle and liquidity, and your risk is from the close to the high of this candle. Does everyone see how like you're risking more in this instance now than your gain? Does that make sense to everybody?
Yes.
Yes.
Right. So the next candle in a perfect world should absolutely come back down to here. Right. It should absolutely come back down to here. Now, because it does come back down here, don't we still have an objective to maybe get back to the top of here, right? We can try that. So as long as this candle doesn't close in between where our re-entry is going to be at and our stop loss, then we can play the call back up to this area, right? If this candle does close inside, then don't try to play to the liquidity, and instead expect price is going to come back down to the swing low, take out this stop loss, and then we'll get another re-entry down here to try to come back up to this swing high. Does that make sense? Everybody tracking that right now?
Yeah.
All right. So in this instance, we're going to say price does not close, right? It doesn't close, it wicks, right? The wicks do the damage. We don't care about the wicks. I mean, the wicks are important. We don't want our wicks to hit our stop loss, but we also don't want the close. The close is what matters, right? Where that candle closes. So it wicks down, it comes back up. This should put you into your trade, right? You should already be in your trade because you had a limit order set. And then the next candle takes out liquidity. And so now you got this full move. And this is what I love about futures, is that you can get in multiple times, right? Because it's not relying on your cash balance or your cash power, right? Such as options. Options, when I first started trading, I would put my entire cash balance on the first trade that I would take. And because I'm unable to trade again, I was very reluctant to pay myself on any time. So if I didn't hit my goal for the day, because it was the only trade that I could take, I would turn winners into losers all the time, because I would literally go in so heavy that I was unable to trade again. And so I built they say it takes, let's just say it takes 2,000 repetitions to learn something new. Well, it takes 5,000 repetitions to unlearn something bad habit. So whatever bad habits or scar tissues that we have built in our brains of trading, right? We're trying to get rid of those bad habits so that we can start trading a little bit more consistent, right? It's all about consistency. I think I had a student ask me, they said, what does the greatest trader in the world look like? I mean, say, well, I told him it was me, right? Like I'm the greatest trader that ever lived. But in order for me to be the greatest trader, I need to still be around 5 years from now, 10 years from now, 20 years from now, 30 years from now, 40 years from now, right? Like I need to still be able to be trade and be consistent. And that in itself, when I'm 80, 90 years old, people will be saying my name, TJ, as one of the greatest traders that have lived on this earth, right? So that is what consistency helps, right? You got to have some type of method in order to give you that edge and be able to rinse and repeat, even if it has cost you losers, right? Like I can lose my first 3 trades of the day, but because I know how to cut my losses, my 4th trade can be bigger than my entire all 3 losses. Y'all have seen that time and time again of me live trading every single day with y'all, where I will take losses and still end the day green because I know how to cut for my losses. All right, so we had you talked about Tesla. So let's pull up Tesla. Ronnie, you paying attention?
Yeah, I'm here.
All right. So right now, this is yesterday's price action. Right? This is yesterday's price action right here. Now, yesterday's price action used here and here. Oops. This is yesterday's price action, right? This was the only candle that kind of closed, and they kind of like played in the channel, right? This was the only candle that closed higher than the previous candle, right? So this is the entry. This is your entry. Here is your stop loss, right? And then we had another candle that closed lower than the previous candle. So if you were bearish, here was your entry. Here was your stop loss. Do you see how majority of the price action was between 189.23 and 190.11? That was all of Thursday, right there. That was the channel right there. That was how you identify that channel. So if you were bullish, you were trying to get your entries around 189.23. And if you were bearish, you were trying to get your entries around 190.11. Does that make sense?
Yep.
For
Right.
sure.
So that was kind of like Thursday. So now the first hour of the day on Friday shoots past this, right? It shoots past this. And because it took out the stop loss for the bears, my directional bias is already bullish. So how do I get into this trade without chasing? Well, all I have to do is just mark the previous candle, right? All I have to do is mark that. And when I mark that, what is that giving me? Anyone?
Your entry.
It's giving my entry and my stop loss, right? That's all I have to do. So when the next candle comes, well, did that give me my entry right there? Am I in this call?
No.
No, I'm still waiting. I already know what I'm waiting for. 190.05, right? And you can put in conditional orders. Like, for example, before, one thing about options, right? Because this is not futures, right? Price is at 193 right now. How much is our contract going to be at 190.05? Right? There is a math to this if you know how to do the Greeks, which I teach my one-on-ones how to do this, right? To calculate how much you should be paying at 190.05 versus when it's at 193.58. And it can be exact too. I can give you the exact number just by using the delta and the gamma, right? Of how much your contract is going to be worth or how much you should be paying so that you can put in a limit order for options before this price even gets to here. And you got a whole hour to figure out the math. Right. So again, it doesn't put you in right now. So then you get this right here. Right. So price, you're thinking, oh, I'm gonna miss out. Is this a good idea to chase this candle right here?
No.
Nope.
No.
It is now. The close of this candle happens at 12:30. The market opened at 09:30. At 0930, the market opened. So it didn't made you wait 3 hours already. 3 hours of waiting. How like that has to be like the biggest issue of all of our trading. Like it has made you wait 3 hours before you can even trade. Well, what if I told y'all that like we make money the more we wait? The more you wait for your trade, the more you get paid. Right? It's already made you wait 3 hours. That has to be the worst feeling in the world. For 3 hours, you haven't been able to get in no trade. You have had to sit on your hands for 3 hours so far.
Yeah.
Right? So then we get the next candle. Uh-oh. You're still not in this trade. You're going to miss out. How many of y'all going to miss out on this call right now? Huh? How many of us is going to miss out on this call? We're just going to miss out. Well, if you keep your entry and your stop loss here, yeah, you might miss out on that, right? You might. But guess what? This candle closed higher and this candle closed lower, right? So how do you get on this trend if it doesn't come back to your entry? Right? If it doesn't come back to your entry, well, now here's your entry, here's your stop loss. Next candle comes, it's close, it still doesn't hit our entry. Next candle comes. What did that candle just do just now?
Hit the entry.
It gave you your entry. Did that candle hit your stop loss?
No.
How much red would you have seen on that contract, you think? I mean, it literally went to, you know, if your entry was at 19230, it only went down 11 cents. 11 cents in the red. And you're already up, you know, something. I'm not doing the math, but you're already up 45 cents right now. So you would have saw 11 cents in the red and you're up 45 cents. Well, where do we pay ourselves? Do we take this 10% right here? Like you might be up 10%. I don't know. Where do we pay ourselves? What's the 3 ways to pay ourselves?
And liquidity.
I gave y'all 3 scenarios. Which way do we pay ourselves? Don't you all speak all at once? I see Terrence wrote liquidity. What's the other 2 scenarios? So you got liquidity.
Yeah, the
Close of the
objective
candle.
Say that again.
Close of the candle.
or
Okay,
close
close of a candle. So that's 2. What's the third option?
an objective.
An objective, right? So we don't have an objective right here, right? We do have a swing high, which is right here. So this is, I hate that my computer does that. This is liquidity, right? Let's see. What that is, buy side liquidity. Boom. So you do have liquidity, right? And you have close of candle. So the close of candle is here. Now, if you look, right, the risk to reward. So in order for this trade to go red, it would have to hit your entry. So that's what you would be risking. And then this would be your reward. Which option do we choose? Do we choose the close of a candle or do we choose to continue to keep going more for liquidity? Which one is the better of the 2? Okay, Terrence wrote buy side liquidity, right? Does anyone disagree with this is the better option of the 2? Or should we pay ourselves at the close of this candle?
I figured the buy side liquidity too would be the
Side
best.
too.
Okay, buy side liquidity. I would choose buy side liquidity too. So next candle comes. It does hit our entry again. So anyone who missed this entry, it gives it to them again, right? And look at where we are now. We're back into this like kind of like range again. So this is an option, right? Now, this is something that I'm going to note is that our stop loss was all the way down here. This is where our stop loss is. If we're this much in the green, should we keep our stop loss the same?
Mm-mm.
Where does it move to? Well, good question.
Definitely not.
Here's our new entry, and here is our stop loss. So the max we would probably lose on this trade if we let it come all the way back down is about break even, right? It'd be a little bit less than break even. So about 5% of our contract, right? That would be about 5% that we would lose on this trade after seeing this much green. Now, when we look at the risk to reward again, right? Do we pay ourselves at the close of this candle? Because you're risking seeing this hit this new entry. Or do we continue to keep trying to go for buy side liquidity? Which one is the better of the two? Close of the candle or buy side liquidity?
Buy side liquidity.
Yeah. This space is smaller than here, right? So ratio wise, we should probably pay ourselves at buy side liquidity. So next candle comes. Don't know why my computer's being weird. Oh, that was the end of the day.
Yeah.
So
Oh.
this was 4 o'clock anyway. So, but yeah, we probably should get out of that trade. I wasn't even paying attention. I'm used to futures, more candles. So that's all you would have got right there, right? If this was a day trade. So you would have got that move at 3:30 and it would have pushed up to there. But do you see how you could have waited for an entry? Your entry when it came until 2:30 p.m., Ronnie, when you played Tesla?
Yeah, that was my issue. Like you said, I was waiting all those hours, and then I kind of jumped in and then wait for the pullback. So it kind of came down on me, and then I had to end up cutting it.
Right now, this was just doing it on the 1 hour, right? You guys know that I like to play on the 15-minute. And the 15-minute, you know, it would have gave us when the 15-minute would have gave you an entry actually here. It would have gave you an entry here, and your stop loss would have been here. As soon as that candle would have closed higher, right? Now, if you didn't play the sales, right? We already said we were bullish, so I'm looking for bullish opportunities. I didn't even look at the sales. The sales would have gave me an entry here, you know, I would have got an entry on a sale at 11 o'clock, right? It would have gave me my entry for my sale at 11 o'clock to play it down, and then it would have gave me my entry for a call at 12:30. So you can see how price action does come back to these ranges, right, for the calls. So just again, where this first candle comes, next candle is a much smaller candle body than the previous candle. So when the candle body is smaller, that means the momentum is getting smaller, right? Expect that it's going to change. That's exactly what it does, right? It goes from markup distribution right into a markdown. And when that candle closes, you should be marking off just like this, right? Marking off just like this. And your entry for a sale will be 192. Then the price action doesn't close inside of there. So that's awesome, right? And then, you know, now you're just moving your things just like this, right? So you're just moving it down just like this, right? Every single time it closes, you're just tracking this down, right? Now, as we come down, notice how small that candle body is right there, right? That's a much smaller candle body. So we probably should pay ourselves on that sale, right? The trend is about to change. Then when price action closes back inside of it, you should definitely be out of that trade. Anytime price action closes in between your entry and your stop loss, you should get out of that trade, right? That trend is about to change. So if you had a sale all the way from here to here, that was a great trade. Don't be greedy and try to get more, right? Like it's going to go back up. So then you should be looking now. This is what we're doing now. So you're just marking off the highs and the lows, right? Just like that. So now the candle comes, we already know our entry and our stop loss. Price action doesn't hit you in yet, right? Price action doesn't hit you in. It finally hits you in right there at 12:30, and then you get this. So now we got a new entry and stop loss, just like this, right? Price action goes in again. Guess what? We got a new entry and stop loss, right? Candle body is getting smaller. it is okay to pay yourself when you see that, right at the close of that candle. It pays yourself, say you pay yourself, well, guess what? When they came back to here, you could re-enter if you wanted to, right? Like, it's nothing wrong with that. It kind of like consolidates for a while. But when that candle closes inside of our entry and our stop loss, we can kind of see like it got big, bit small, small, right? Like the trend was changing in that instance. Like we can clearly see that, right? It's literally changing in that instance. And then it goes from big, big green. So now the trend is changing back again. It went from buyers and then 3 and out by the sellers, and then back to the buyers again, right? Like that's kind of like what it did. But when that candle closed inside of there, I'm no longer interested in that call at that moment, right? So now I'm going back to just like this, right? I'm going back to just like this to kind of see what do we get. Doesn't give me anything, so guess what? I'm just waiting right now. Every single time I'm just tracking this thing down, right? Still, that candle closes outside of there, just like that, right? Closes outside, so now I have my entry and a stop loss. It goes back to red again. That probably would maybe take a loss on that trade if I was trading, honestly, because I wouldn't have wanted that candle to close. When it closes, I'm expecting to hit my stop loss, and that's exactly what it does. So if I had taken this trade right here, right, like if I had taken this call at this opportunity, when this candle closed in between my entry and my stop loss, I no longer need to let it go back to my stop loss. This exiting right here from this entry, right, is a small loss compared to if I had let it go all the way down to here. Does everybody see the difference between cutting your entry there versus here? Right? Admitting that, hey, I entered too early. Like admitting that to ourselves that we entered too early by taking the entry here versus here. Right? Like we can see that there was a fair value gap right here, and it was actually an entry. But there was a fair value gap right there that price consolidated for from 1,300 all the way to 1,500 for 2 hours. It just played in the channel. And so by exiting here at 192, we're saying, hey, our entry is too early and that we can get a better entry here. That's what that tells you. And so when price comes to here, now we get that move like that. Right? And so if this was your new entry and this was your new stop loss, notice none of these candles close below our entry. And if you wait for liquidity to get taken out, which is this, you get a move from 192.22 to 193.30. And you can maybe leave some runners for the last few minutes of the day. Did I show you a little bit better, Ronnie, on how to play how to play that trade?
Yep, definitely.
Right,
Just
let's
front
look
run.
at,
I just front run it.
huh?
I just had tried to front run it when I seen it break out. I just tried to jump in, but I really was trying to play that gap. I was just trying to play that gap that Tesla got right now.
Well, I mean, look at it like this: like change the way you're looking at change the way you think about things, and the things you think about will change. You know what I'm saying? So add a little bit more to your tool belt. So here we got in the video. Now, I'm going to delete these lines right now, and I'll explain that in a second. But first candle right now, right? We should assume, right? If we just look at this right here, this old fair value gap right here, right? This is your old fair value gap, right? Where are all these closes happening? All these closes from Thursday are happening where?
Inside the fair value gap.
Above 50% of the fair value gap, right? So yes, it closed inside of there. It closed inside, but the wicks are doing the damage right now, right? The wicks are doing the damage, but every single one of these candle bodies all closed above 50% of the fair value gap. And when the candle bodies close above 50% of the fair value gap, isn't that a good indicator that price wants to go up?
Yeah.
Right? And where could price want to go to? Well, this fair value gap here, right? It could be want to go there. It could be want to go to this liquidity. So when the first candle comes of the day, where's that close happening? Is it above 50% of this fair value gap?
Yeah.
Yes, no, maybe so. What do y'all see? It just closed above 50% of this fair value gap.
Yes, it
Sure.
did.
It
For
is.
sure.
And what is that a good indicator of?
Price
Bullish.
going up.
That it wants to go up. So guess what I'm gonna do? Entry, stop loss already, right? My bias is now bullish for the day, all because I just marked off a few little boxes. That's it. Next candle comes. Do I have an entry and a stop loss for continuation?
Yes.
I do. So next candle comes. Does that tap me in for a call?
Yes.
Yep.
It does, right? Now, as we're trading this, NVIDIA is at all-time highs. How do I know where to pay myself? Well, the only other three is a close of a candle. So that's the only way I know how to pay myself, right? However, we got this green candle here. So I'll just use my trend-based fib extension, just like this, right? Use my trend-based fib extension, draw it on this first green candle, just like this, and give me some levels of support and resistance to kind of like pay myself. And I can see we're at the 618. So I could pay myself here at this close, or I could try to play up to my 1.618, which is my objective. Right? When price gets above here, I'm trying to get to my objective. So do we pay ourselves here? Which one is the better option? This is how much you're risking right here. You see you're at 710. Price should come back to 709.29, right? Because that's now our new entry and our new stop loss. Or try to play up to our 1.618. Which one has the better? Which one is more, the risk or the reward?
The reward.
Which one? I didn't hear you.
I said reward.
The reward, right? So I'm probably not going to pay myself to close, and I'm going to still try to stay in this trade to get to my 1.618. So boom, next candle doesn't even hit it, and now it hits our target objective, and we should be out of that trade. And that's the first trade of the day. That only made us wait 15 minutes to get into that trade, and you would have got an entry from here at 706 and got a $6 move to the upside. Now, if you're noticing that candle body is getting smaller, so trend is probably going to change in a little bit, maybe come back down and give you another re-entry at 709. But does everybody see, like, that was NVIDIA right there on Friday. That was a $6 move. How much money is that on NVIDIA to get a $6 move to the upside?
Good money.
It's probably real good money. You know what I'm saying? Like that's a day trade right there. So price action doesn't come all the way down here. All right. I was just assuming that it would come down here, and that's okay, right? I'm not, but the momentum got back stronger again, right? The body is here. So where's price maybe trying to go to now? Now my new objective is trying to get back here. So how do I get a re-entry to play into NVIDIA to get up there, right? How do I find it? Well, guess what? I just do the same exact thing. Entry, stop loss, just like that. And now I can try to play up to my 2.618, right? So next candle comes, doesn't give it to me. That's okay. Next candle hits that, right? Body's getting smaller. It's back at, notice every single time it hits a 1.618 or anything that ends in 618, that candle body gets smaller. So they're thinking, all right, which way do I go? So it never gave me my entry, and that's okay, right? I would have just been waiting. The trend kind of like changes right there, right? And it kind of like for the rest of the day, just like this. So it never gave me this entry, but I also never moved my lines. If I moved my line to here, since that was the last time, maybe I would have got tapped in on this move up, maybe, I don't know. But that's what it would have gave me right there, that move, and it would have pushed me right into there. Just say I ignored all of that, right? I ignored all of this, right? This is the objective. It's an area where you should have paid yourself. The next time a candle closed higher was here. And so this would have been my entry right here. You see it tap me in twice. And then my target would have been trying to get to my 3.618 right up here, right? Just like that. And then boom, it hits the 3.618 for the day. Does that make sense to y'all?
Yes.
Right. So
Yep.
you would have been able to hit NVIDIA multiple times throughout that day to play it up and just playing the levels, right? Playing the levels. Just like that from our 618 all the way to 1.618 to the 2.618 to 3.618. You would have had successful trades, right? Don't worry about missing out. You should make sure that it hits this. This is so on the 1st of February, I gave out Enphase. I gave out Enphase for a call, right? Does anyone know why I gave this out for a call? Right? If you go into, and I said I'll start doing this more because I'm heavy on the futures right now, right? So I only want to swing trade options. I don't even day trade options anymore, right? I could, but I don't. I make way more money, I feel like, day trading futures than I do options. But anyone know why I gave out a call for Enphase before this move up? Does anyone know why? Like, what do y'all think was the reason why I decided to do a call on Enphase? Anybody got an answer?
Was it the gap up?
No, I gave it out on the 1st of February. So I gave it out the call here.
Oh, okay.
So this day is the day I gave out the call. But does anyone want to take a guess? Think about what I've been trying to teach y'all already. What two components did you think I already had in order to do a call? What's the main two things I've been showing y'all all daggone day?
Entry and stop loss.
Entry and the stop loss. So I must have had an entry and a stop loss in order to do a call. I absolutely did, right? And I actually used the monthly because I said I'm swinging. Does everybody see why I did calls, right, on Enphase, right? Why I thought it was a good time to do a swing of 45 days out to go to the upside, right? Price had closed in December above here, and I had to wait all of January to get my entry. All of January, I had to wait to get my entry. That's 30 days of waiting. 30 days of waiting. A couple hours be making us feel like it's god awful. Imagine having to wait 30 days to get your entry. Does everybody understand that? Right? I had to wait 30 days. And then guess what? Now I have my entry and I have my stop loss. This candle doesn't close in between my entry and my stop loss. So where am I trying to pay myself? Right here. This fair value gap. Right here. This is where I'm trying to get back up to. Right? If it fills that fair value gap, that's 145.67 with a 103 entry. That's a lot of money to just sit there and just let it do its thing. I just waited for the close of this candle to tap me in. And then on the first, although I saw some red, right? I did see some red on this trade, but I bought in the money, like I told you, right? So even though we was at 103, I told you buy in the money contracts. And so when we bought in the money contracts, when price dips down, that theta doesn't eat your contract so much. And now we're sitting at $100 calls, and it's already up $22 from being in the money. And we still are only halfway to getting to our target. Does that make sense to y'all?
Yep.
Let me see. Will, you on here? You got a mic today?
Yeah, yeah.
What was the strike price that I gave you for PLTR?
1631, I believe.
1631.
I don't know why I
Let's look
remember
at
that
where
number.
PLTR is. $24 right now, right? Why did I pick PLTR to go up? So I think I found it on I think I found it here, right here on the daily. This day, when we were looking at it, right, had shot up. It had shot up above here, above our target. So the next day came, and guess what? I knew my entry, I knew my stop loss. Look at where PLTR is now. Does that
Yeah.
make is this on the click to y'all? Like, do you see that? Like, I can do this on any chart, any asset. It doesn't matter. If you follow the rules are the rules. Like this game is so rigged that the rules work on all charts. Majority of the trading volume is a computer program. They're meant to follow rules. They can just do whatever they want in between, you know, where their rules are allowed, and that's what gets people in trouble. Right? These big banks and financial institutions, majority of their volume is made off a simulator from a computer, and we get tore up to a computer every single day. It's like chess, right? I'm a big avid chess player, right? I probably got like a 1800 ELO rating, but when I go and try to play the 2500, you know, chess master that thing be tearing me up. So in order for me to win, I just need to scale it down to like, you know, 16, 1800. You know, sometimes I want to play 2000 just to get a little bit better. But we got to stop losing to that computer. Because that computer be tearing us up. It'd be 21-0 and skunk and Madden. And we'd be looking at it as like, damn, I'm going to win this game. We're like, nah, it's 21-0. You need to pass up the sticks. My phone, is that Charles? I don't remember which day I gave I forget when I gave that entry to Will, but you know, he bought the shares at 1639. It was the same day that I was waiting for, you know, I was looking at Riot. Riot did the same exact thing, right? And I gave it to y'all on the monthly, same exact thing, right? I was looking at Riot on the monthly, and my goal at the time, my goal at the time was just to get back up to here, right? Like I was just trying to get to that gap, but I waited for Riot to get into this situation right there just to like kind of go up. Same thing I gave y'all for Tesla, right? Right. I think I gave Tesla entries out at 181. Now I didn't know if it was going to be 181 or 177 because it did have a 177 down here, right? And you kind of like see it was the same exact thing right here. It was 177. That was the entry. Remember, Will? And I was like, all right, we can take the 181, which was here, right? And that's the one that you guys took because at the time we were all the way up here. And I was like,
Yep.
or we were somewhere like right here around 195. And I was just like, wait for 181. I think you bought shares at 181. And I said, it's still a chance we can come down to that 177.
Yeah.
Right. And it absolutely did come back down to that 177. And notice none of that counterparties came. So look at where your share is going to give you. Because you got those things at 181, you got this, right? That's 207 at least. Like this whole move, for every action, there's an opposite and equal reaction. You got 170, you got 201, you got potential of getting this, right? Like you bought at 181. Look at what these shares are going to be. Imagine the people who bought NVIDIA, right? Like NVIDIA was just at like 200 bucks. It really was. It was just at 200 bucks, right? Like it was just all the way down here, right? So we look at this on NVIDIA chart and just look at this right here. So when we first got this, if you just knew about this rule back then when I'm teaching, it would give you an entry in December 22, right? It doesn't hit this, right? So you're still waiting. It doesn't hit this, so you're still waiting, right? It doesn't hit this, so you're still waiting, right? But then price action hits this one. Even if you got in at 419, that's okay. This thing probably going to, like, I'm be honest with you, it'll probably be over $1,000 by the end of the year. I've been telling y'all that for a long time. Like, I think NVIDIA will probably be over $1,000 by the end of the year. It's only at $700 right now, so it's still got like it can be go up more. We've seen this happen with Tesla. Like we've seen this like a few years ago. Tesla just kept on going, right? It just kept on going. I think it was at one point. It was at like before the splits. It just kept on going. It was at almost $1,100 some at this moment, right? So NVIDIA might get the split when it comes up to that moment again. Who knows, right? I wouldn't be surprised because nobody's about to be paying $1,000 for a share in NVIDIA. So it'll probably go up and probably do a split. But anyway, that's neither here nor there. You know, we see this happening over and over, right? Like they give you these big moves up. And so don't be afraid to take advantage of things when it goes on discount, right? Look at NQ. NQ is no different than what I'm showing y'all right now. This will be the last thing I show y'all. Right?
I got one question for you about NVIDIA. Would you put your entry at 707.94 now?
All right, so let's look at it. Now, what are you trying to do NVIDIA at for long term or day trading?
Well, I like to swing, so I buy like at least 3 weeks out or 3 months out usually.
Okay, so if you're doing that, then no, because if you're swinging, your entry is at 634.93. It's right there for you. You have to wait.
493.
You see this right here on the monthly?
Hold on, let me pull up my. Oh, let me see. Look at yours.
So something that I encourage everyone when you do join the class, have separate monitors up. Have a monitor where you can see my charts and then a monitor so that you can have your charts running simultaneously so that you can do the same exact thing that I do. But when you look at the monthly, your entry is into 634.93. So no, you do not buy at the 700s.
Oh,
Not
okay.
for swinging.
I was looking at the daily. My bad. I got you.
Daily and below is for day trading.
Yeah.
Right. So daily and below is for day trading. But if you were looking at this, for a day trade, then yeah, I'm waiting for 707.94.
Yeah. Wow.
Right. And for that day trade, I would just be looking for price to keep riding that 5 EMA. Every single time it hits that 5 EMA, price shoots up. It's the 5 EMA, it shoots up. It's the 5 EMA, it shoots up. Right now we're extended away from our 5 EMA. So when we look at how much we went next week, right? Like we're away from this 5 EMA. So does it mean that the trend is going up? So it's hard for me to want to do puts on here. I feel like you either do two options. You either try to do a put or you wait. I like to wait. I don't want to bet against all this money. So if it comes to my entry, cool. If it doesn't, cool too. All I got to do is just wait a little bit more. We get paid to wait. I don't feel like I have to know every single thing about NVIDIA and be like, oh, it closed higher than here, so it's coming all the way back to 666 next week. If it don't want to come back to 666, it won't come back there. Right? All I have to do is just wait. It either will give me an entry or it won't. And then I just got to wait again for another entry. So I'm not betting that NVIDIA is going to come back down to 666 next week. Like I'm just not, right? But when I look at this daily, right, I know for damn sure I'm not paying. And this is the reason why I don't think we will come back to 666. Since January 8th, we have been only above this 5 EMA. That 5 EMA is way above here. So is it likely that we can come back to, that 707 level and still be in this bull trend? Absolutely, right? Like we're here at 21, we might come back down there. So when Monday comes, that's what I'm be on, that 15-minute. Just like that. Be on that 15-minute, just like this. And I'm have my bias on where I think price should want to come to. And then it's either going to follow the rules or not. So that is going to be it for this class, right? Like, hopefully this helped you guys out, but I have to catch a flight. And I can't really be on here too much longer. That is it for me. Now, if I am still doing 50% off for March 101s, right? I usually charge $2,500. I'm only charging $1,250 to select individuals to join a March group class. That is it, right? That's it. The Discord is still 100. Come March, I will be increasing. Not for anybody who's already in Discord, you are grandfathered in. But come March, price will be doubling to join the Discord, right? As you guys are starting to see more success, you know, and as I start growing this business, because I've only been doing this for a year, right? But it's a lot that you're getting with this, and we're about to make a lot of good money. So come next week, we'll get right back to it.